Next one up here, Tom Lee. Market is still in buy the dip mode.
Tom Lee, who recently raised his target to S&P.
And the one other thing I do think is worth mentioning, we're in a different regime when it comes to market than we've ever been in before. And so I do think you got to be aware that because central banks are so proactive nowadays in terms of worrying about downside risks to the market, they get spooked very easily. I will say it's a lot harder to get those 50% type crashes like we got in the great financial crisis, right? Very hard to get those nowadays because at the end of the day, like they start seeing the market downtrend in any significant way and they're very quick to start cutting rates or change policy or do whatever they have to do. We saw that in Rona, right? Market starts down. I mean, Rona should have been a draw. Rona, the drop in the S&P 500 was, 30 something percent, very quick. But honestly, that drop in the Rona crash should have been bigger. It should have been a 50, 60, 70% drop. Remember, we were talking about closing the economy for potentially 3 years they were talking about. 3 years. They were talking about Great Depression level disaster for the economy. We should have been down 60, 70% in that crash. That should have blown away the great financial crisis. But what happened? The Fed stepped in like crazy and was willing to do whatever it took. And that calmed the market down. And so we only fell like 30-something% in that crash and then start coming back. Boop, 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 boop. That should have been the big one. Like literally that should have been ridiculous. But it was actually, it was big, but it wasn't nearly as big as it should have been. Let's put it that way. That's what she said. Alrighty, next one up here, Tom Lee. Market's still in buy the dip mode.
Okay, Tom, good to have you. I loved your note the other day looking at what S&P revenue has done in the face of declining inflation. And your general point is that real revenue has accelerated, and that kind of explains why equities have been so resilient.
That's right, Carl. As you know, many investors and pundits thought as inflation fell, and it's been cut in half in the last 2 years, that would cause revenue growth not only to hit a wall, but that earnings would stall. But instead, S&P revenue growth is going to be over 5% this quarter. And on a real basis, that's over plus 2%. And that's the strongest. It's really one of the strongest numbers in more than 2 years. And so it is a really high quality earnings season so far. And, close to 80%, or actually more than 80% are beating earnings so far. So it's a good beat season, but it's early.
Right. And how much of it is due to financials? Is any kind of tailwind, although we heard various comments about this, if a Fed tailwind does exist, is it likely to affect other areas of the economy as much as the banks?
Well, in your opening comments, you talked about industrials, and that's something to watch because last week financials reported, and it was, pretty much universally better than expected, and financials are doing really well year to date. But the other group that's very sensitive to the Fed cutting would be industrials, and there's a lot of industrial reports this week. It's about a quarter of the S&P, but I'd say it's so far so good. And again, industrials are doing well in the face of an ISM that's kind of been at rock bottom for 2 years now.
Tom, how much would you ascribe the recent momentum to aspects of the election as that draws nearer, just over 2 weeks away?
I think that's been a dynamic. I mean, I've been fooled by seasonality because I figured from September to Election Day, markets would be very tentative because this is an extremely close race. I mean, this is a coin toss, according to Nate Silver. But something that Stan Druckenmiller said last week might explain a lot, that markets are betting that Republicans could take the Senate, and that actually could ignite animal spirits. So there may be underlying momentum that the Republicans take parts of Congress, and that's why markets are bullish.
Are you at all worried? There were some...
It's funny they keep saying, it's a coin flip race, and I look at the polls, and it looks insanely close. Like, coin flip, right? Doesn't feel like it, though. It doesn't feel like it's really that close. Like, I do believe one candidate is significantly ahead of the other. Just feeling, just based upon what I see out there, talking to people, it feels like it's not really that close, but I don't know. Maybe it is.
Inside of German PPI was down 1.4 year on year, Tom, but there was some ancillary commentary about worries about a reflationary period, largely due to geopolitical events. We mentioned oil coming back a bit today. How worried are you about that?
Well, I think that headline CPI could definitely get affected because oil is oil moves dynamically, and it has an almost immediate effect on headline CPI. And we know transport costs have also spiked recently. Part of it's seasonal, but that affects headline. I think the market's going to be somewhat skeptical that could trigger a sustained reigniting of inflation, but I think the economic data is going to be a little confusing the next couple of months because, the Boeing strike itself is going to affect the jobs report. But I think ultimately the Fed is still on a path towards getting back to neutral. I think that should be the focus, and that means, stocks which have been strong are really still a buy the dip market.
Okay. Buy the dip market. Yeah. I think the setup for the short term is still pretty good here. I do get a little suspect because, September and October were supposed to be these bad months for the market, and certainly they have not been, right? November, December expected to be good months for the market. And sometimes just worry about reverse Uno here, and we get an opposite reaction, and for some reason November, December down. But I do think there could be a lot of excitement that comes specifically if Trump wins. That's a real. If Harris wins, I don't think there will be nearly as much FOMO and excitement in November and December. If Harris wins, I actually think the market will go down November, December. That's my personal belief on that, because I think a lot of people are the betting marks are kind of thinking Trump's going to win. And so if Harris wins, I think there's going to be a lot of fear around corporate taxes going up, which could significantly affect the market in a negative way, obviously, if she raises corporate taxes. I think there's going to be a lot of fear about more regulation. I think there's going to be a lot of fear about deal making is going to be really tough if Linda Khan stays over there. So I think there's a lot of, I think there'll be a lot more fear if Harris wins, essentially. And I think the market will actually probably go down after election if Harris won for at least, a few months there, right, of kind of downtrend. If Trump wins, I think there's going to be a lot of FOMO. I think there's going to be a lot of people super hyped and expecting, a booming in the market. And so I think you could see a lot of upward momentum in the market for at least a couple months after the market, after the election. And then after that, we'll see what happens, right? People might get too excited too fast and then realize, oh man, we shouldn't have FOMO'd like crazy, 6 months later or something like that. But the moral of the story is that's kind of what I think is going to happen, depending upon who ends up winning here. Hey, it's Jeremy. I hope you really enjoyed that clip here today. Would you like the ability to understand how to do your own research and not just rely on others to tell you which stock to buy? Would you like to have confidence in yourself when it comes to making your own investment decisions out there? If you're going to be able to do that, you got to have full understanding of everything you need to look for in stocks, how you can decipher whether a stock is a buy, not a buy, all those sorts of things. That's where my private group comes in to help. The description area down there will have a link to apply to join my private group. We've taken over 1,000 people over time and been able to teach those folks exactly what to look for in companies, how to research companies, how to understand financial statements, understand all the different metrics so you can make judgments on companies. And we've been able to have so many people, an incredible amount of people, hit 6 figures plus in their portfolios, 7 figures plus, even some hitting 8 figures plus in their portfolios over time. So if you're looking to take your game up to the next level and play this on a much higher level, apply for my private group. Once again, the link is in the description area. Let's get it out of the way. The election. The election is 12 days away. Okay. Listen. And when I say 12 days away, I'm talking 12 trading days away. I think in terms of trading days. I don't think in terms of normal days. I think in terms of trading days. As I'm recording this, the election is 12 days away. 12 trading days away, right? Now, this has ramifications because you do have a lot of people that have conspiracies about the Democrats control the market or the Republicans control the market and all these sorts of things, right? And so the thought process here is, if that's true, right? Let's say you have this conspiracy. Let's say you have a conspiracy the Democrats control the stock market, which is not true, but let's just say that's your conspiracy theory, okay? The Democrats can control it. They can control whether stock prices go up or down, right? Well, being that we're 12 days away from the election, then you're going to be running with the conclusion that Democrats are going to basically make the stock market go up nonstop for the next 12 trading days, right? Given that you don't want any problems, you don't want any drama before that election day comes. For any of the people that are still kind of, haven't really chosen a side, if there's even that many people out there that I feel like most people have already chosen a side. They know who they're voting for. But If you don't want any drama before the election, obviously, if you're on the Dem side. Now, if you also have a conspiracy theory that the Republicans can control the market, right? Well, the next 12 trading days would be a great time to have this market go down substantially, would it not? Right before the elections, and all of a sudden the news lines are all hitting, and S&P 500 goes down huge, Dow down huge, Nasdaq down huge, right? Yeah, that would definitely be an opportune time to do something like that. Now, the truth is, neither side really controls the stock market. There's always these conspiracies about. Yeah, but at the end of the day, you look at the stock market over time, the stock market does great under Democrats. The stock market does great under Republicans. Sometimes it does better under Democrats. Sometimes it does better under Republicans. The stock market can crash under Democrats. It can crash under Republicans. The truth is, you can see no correlation between really like which political party controls the stock market. No, that's not how it works. Okay, it depends upon it. There are many various factors: what the Federal Reserve is doing, how stock market earnings is, all those sorts of things. But if you want to go down your conspiracy rabbit hole and you think one political party controls the stock market and whether stocks go up and down, well, this is going to be a real interesting next 12 trading days, isn't it? Okay. Now, in regards to election, you can look at how elections usually do. So what I'm showing you right now is S&P 500 election year seasonal patterns, 1949 through 2022. And what we're going to find, and we're the red line here, what you're going to find is, generally speaking, the market does very bad in September and October in an election cycle where it's an open field, right? But the thing to keep in mind here, we haven't had this. Like, the market's been phenomenal. The market's been very good in September. Market's been good in October so far, right? And so now keep in mind, usually what happens is going into the last like 2 weeks before the election, the market actually upticks significantly, which is interesting there, right? Market rallies in the election, and then after the election comes out, right, then the market drops again, and then starts an end of the year Santa Claus rally. So in theory, if it's going to play out the way it usually plays out, technically the next 2 weeks should be very good in the market. The market should uptrend and uptrend and uptrend if this is the normal stuff usually plays out, right? And then after the election happens, we're going to have weakness for several weeks, and then we'll be Santa Claus rally into the end of the year. Keep in mind, this could be reverse Uno. Like I said, we didn't have this situation happen, so who's to say this situation? So it's interesting to look at this stuff and how these things usually transpire, but don't ever bank on it. Some people like to bank on this stuff, and they screw themselves so bad. I know a lot of people that will essentially thought, oh, market's going to tank into the election. They're buying put options. They're going on the sideline. They're going cash heavy. I'll buy back after the election. The stocks are going to be so much cheaper. S&P 500 is going to be down 10, 15, 20%. You just watch, right? We know what usually happens. That's what they were thinking. And they were 100% wrong. Imagine you threw away a good portion of your portfolio in put options that expire, let's say beginning of September, you place those put options on, and you're like, oh, market's going to tank. So I'm going to buy those put options that will expire at the end of October, beginning of November. I mean, you're going to have lost everything, like 100% of your value. You're going to end up having lost, right? Never mind if you win cash, you win sideline money, right? Because you're like, oh, I'll be able to buy back. You've gotten screwed bad. Not like a little bit, but like bad. You know how many stocks are up 10, 15, 20, 30, 40% in the last, 30 to 60 trading days? It's a large number, including some of the most popular ones, which is what the stocks that people actually like to own. So the moral of the story is we should be rally mode for the next 2 weeks. Don't bank on it. Don't bank on it if there's anything we learned here now, right? Now, on Tuesday, an important company's reporting earnings named Enphase Energy. Enphase Energy, huge, they're a monster player in the solar industry, okay? Now, the solar industry has not been in a good place at all for really at least the past year and a half. The Federal Reserve raised interest rates substantially, and that has very negatively affected the solar industry, right? And then you tack on inflation hitting the consumer. It's just been a bad setup for solar, right? They report on Tuesday, this stock has done horrible. The stock is down over 30% so far this year. Meanwhile, the Qs, the Nasdaq's up 22% plus. S&P 500 is up 23% plus. So we're talking about over 50 percentage points of divergence here for Enphase. It's an important stock. It's not a secret stock. Like, no one heard of this. No. Big in the retail community, or at least it used to be big in the retail community. Additionally, a lot of Wall Streeters pay attention to stock, and it is seen as a risk on stock. Now, in regards to this one, there's something fishy going on. Something fishy. Something doesn't smell right, folks. Okay, listen. Look at the revenue numbers for this quarter. They're expected to report down 28%. Then magically, December quarter, they're expected to have 44% revenue go up. And then the following quarter, 64%. And a lot of analysts cover the stock. Something smells fishy about this stock, okay? And the reason being is look where the stock price is. It's the lowest it's honestly been in years. But yet they're expected to have this major uptick in revenue. Something doesn't feel right here, right? Something doesn't feel right here. My hunch is maybe these numbers are not even going to be remotely close to what Enphase puts up. Just a theory. Because why is this stock sitting in, once again, this is not some hidden stock that no one knows about. I've never heard of Enphase Energy. No. Popular retail, very popular Wall Street stock. Why is the stock lagging this much when they're expected to all of a sudden flip things over to, great growth rates again? Like those are phenomenal growth rates. All of a sudden they start putting up 44% revenue growth, 64%. Something doesn't smell right here in regards to stock. So this is one you got to pay attention to. Definitely pay attention to this. General Motors reports on Tuesday. General Motors, an automobile giant, right? One of those companies, if you want to know how the economy is doing, a lot of people look at somebody like a GM. If people are buying new cars, generally speaking, like people feel pretty dang good about the economy. People aren't buying new cars, not so much. Now this is a little bit different because we're in a high interest rate environment. To get auto loans right now, a lot of people are paying 7-8%, sometimes more than that on these auto loans. It's even if you have good credit, right? Tesla has some incredibly competitive offers in the market where they're even offering up to like 0%, which is ridiculous, right? But General Motors, something smells fishy here also. And here's why. If we look, their revenue is actually expected to be around flat for the next 3 quarters, for the one they're about to report here on Tuesday, and the next quarter as well. Which makes me say, are they really going to be able to do that? The auto market does not sound like it's in a good place right now. And I have a lot of questions if General Motors is actually going to be able to do that. I don't know. We'll see. Now, UPS, Union Pacific, they're both reporting on Thursday. Very important you pay attention to these companies. These are the economy. Right? It's hard to move things around the United States of America without UPS and without Union Pacific. Like these are the companies, right? And you got to pay attention to what the guidance numbers are specifically. If you want to know if it's going to be a bad holiday season, is it going to be a good holiday season, what's going on this holiday season, watch UPS, watch Union Pacific. They're going to tell you in those guidance whether it's going to be a good holiday season. Because at the end of the day, if the retailers are ordering a lot of product, it's going to go around in these sorts of players, right? Pay attention to guidance. Now, in regards to guidance for UPS, which once again is a huge sentiment mover, not a huge index mover from the perspective of like, it's not some massive weight like on Nvidia's or Microsoft or Apple, those sorts of companies, but it's a huge sentiment for the recession, right? Recession odds keep getting lowered and lowered by folks. I think I saw Goldman Sachs just this past week move their recession odds. I think it was down to 15%. So these recession odds keep dropping. If people are going to feel like recession's not coming anytime soon, they got to feel good about UPS numbers. Now, for UPS guidance, 5% revenue growth for the guide, okay, is what analysts are at. If this is a pretty good setup, I will say for UPS. If they guide 7% plus, I think the stock's booming, and I think recession fears will be alleviated for at least the next 6+ months, which I think is going to lead to more of a euphoric type feeling in the market, certainly, if we can have something like that from UPS. Additionally, with Union Pacific, the railroad operator, right, they're expected to have revenues kind of flattish to maybe up 1% as far as their guidance goes. If they do like 3% plus, booming. Business is booming. That would be huge for Union Pacific and huge for the market and huge for keeping away the recession fears. But we have an issue with Union Pacific. Unlike UPS, autos. Union Pacific does get a major amount of their revenues from automakers, right? In transporting either auto parts around for new vehicles or transporting entire autos around. And so given that the new auto market is likely not very strong right now, this is something that's going to weigh on Union Pacific. So that one, I wouldn't put as much weight in Union Pacific. Also, Union Pacific has a lot of agriculture. That's kind of like one of their big businesses as well, which is just a very stable business. So don't put as much weight into Union Pacific. Still important to look at, still important for sentiment. Put more weight in UPS. More weight in UPS, weight in Union Pacific, but a little less weight in Union Pacific, right? Now, things are about to get way more serious over the next 2 weeks after this week, though. And the reason being is over the next couple of weeks, we're going to have Meta, Amazon, Apple, Google, Mr. Softy, Microsoft, AMD, Salesforce, all those big dogs reporting. So when we're talking about the level of seriousness is about to get elevated, it's about to get elevated in a massive, massive way, because that's going to be when we start to talk about major moves in the market happening, right? And, I'll certainly do a video at some point kind of diving into a lot of these stocks and kind of my feelings, because we look at Meta's, around $1 million position in the public count. PayPal's a big position now, several $100,000 in that one. Palantir, same thing. Amazon, same thing. So I'm going to probably talk about all these ones next week and kind of my expectations. By the way, in regards to public count, I did a video. I don't know if you guys saw this or not. 6 days ago. Looks like 60,000 people have seen it so far. I talked in depth about the public count, talked about my feelings about every single stock I hold in that portfolio and any moves I'm planning on making in that portfolio and kind of my expectations for a lot of stocks. So if you didn't get to check out that one, once again, it was 6 days ago. It was, a couple days before I posted this one. The stock market's on the verge of a shocking move. And a few days before I post this one, 7 millionaire stocks with unlimited upside potential. So yeah, if you want to hear me talk about a lot of those stocks, definitely watch that video there. Okay. Now, the most important companies to keep an eye on this earnings season, in my opinion, it's actually not big tech, even those are the biggest market movers. It's actually not Tesla. It's not Palantir even though I love Palantir. The most important companies to pay attention to this earnings season, D.R. Horton, Lennar, Pulte, KB Home, Toll Brothers, the home builders. Pay close attention and listen to those conference calls. Hear what they have to say about homeowners. Mortgage rates have gone up again, man. They've gone up a lot recently since the Fed cut rates, which people thought it was going to be opposite. But anyways, that just goes to show you like the market's sometimes opposite of what people think. Most important companies, because essentially if these companies start reporting some really weak home order numbers over this next few quarters, it's not going to mean good things for the economy in 2026. 2025 build-outs are already set, right? These home builders have already put up their good numbers, and so 2025 as far as home building is looking good. 2026 is a question. If these companies over the next few quarters report bad numbers, bad commentary, that's going to put us into a situation essentially where the housing market is going to be very weak in 2026, which means construction is very weak, which then if we want to actually get back into that recession talk, then you can begin to get in that recession talk. Pay attention to home builders. They're the most important, even if you don't own any of them. I don't own any home builders. I'll be paying attention to all those companies' earnings like a hawk this earnings season. Now, my advice for earnings season here, okay? 3 core pieces of advice I'll give you. 1, pay attention. Pay attention. Listen to conference calls of these companies. Like, this is very important. Very important. Look at all the numbers. Look at the financials. But listen to the conference calls. You get so much high levels of detail in those conference calls that you can't get anywhere else. You're going to find out little nuggets of information you couldn't find anywhere else. The conference calls matter so significantly. Number 2, don't freak out. There's going to be stocks moving all over the place. If, let's say, you're in a stock and you bought this stock because you believe the stock price is going to double over the next 5 years, right? And all of a sudden, stock's up 12% in a day, and you're like, oh my gosh, like I'm making so much money. And next thing you know, you can get lost and like sell the stock because you're like, oh my gosh, I made 12%. Like, if you got $100,000 in that stock and you make 12%, it's $12,000. Like, oh my gosh, I'm selling, I'm taking my profit. Well, if you expect that stock to double over the coming years because you expect the profits to go to a certain number, right? You expect it to command a certain P, and then also you sell the stock, you might look back with regret. You might say, oh, I sold this stock with a $12,000 gain when I could have sold it for an $80,000 gain or a $100,000 gain in a little while down the road, right? So don't freak out. Additionally, if a stock crashes, don't freak out. Like look at the numbers, listen to conference calls, make your judgments and assessments based upon that. Many times newer retail investors to the market, they make their judgments based upon what happens with the stock price. If the stock price is going down, they feel like, oh my gosh, the earnings were so bad, the conference call was so bad, this company sucks. If the stock price shoots up 5, 10, 15, 20%, they're like, oh my gosh, the earnings were so amazing, the conference call was so amazing. Don't let the stock price move cloud what's actually going on. Listen to conference calls, look at the numbers, then make your judgments. Don't freak out, okay? Don't be a noob in the market because that's what noobs do, okay? Additionally, be ready for 5 to 20% moves. There's going to be a whole host of 5 to 20% moves all over this market for the next 2 to 3 weeks here. Just be ready for that, okay? It's going to be significant. Your portfolio is going to be shaking around in a major way, okay? If you're in the private stock group, keep tabs on the income statements tab. I'm going to be grading a ridiculous amount of income statements over this next over this next 2 to 3 weeks. And so definitely make sure you keep an eye on that specific category for income statements there, guys, okay? Speaking about my private stock group, if you're looking to get access to that, you want to apply for access to that, pin comment down there today, click on that, fill out a form. You can talk to Andre, see if it's a good fit for you. Access to my entire library of premium courses, including Become Master of Stock Market, Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery. Additionally, you get access to the $2.4 million Fidelity account, all the stocks I'm buying and selling in there with screenshots each week as well. Access to 1000xstocks.com and premium investing software. We can bundle it all together for you. All that good stuff, plus exclusive weekly videos from me. Much love, be ready to rock and roll, and have a great day.